Good morning, traders and investors. It is Thursday, June 6th. Not a whole lot going on in the charts, but I got some interesting things to cover anyways. Long story short, the market is starting to get to a point here where we're about to see something, I think, very big happen. And the question is, which way is the market going to break? Nobody has a crystal ball. I have no idea. We just have thoughts of what could happen and should happen, but either way, it doesn't matter. We follow price, and that's the big question. So let's cover a couple interesting things. Oh, and I should mention, yesterday I was away at my daughter's Ultimate Frisbee tournament, and I got some clips, and I put together a really cool short, about 30-second video at the end here if you want to see what happened there. They did make it to the championship. I got some good clips, and anyways, take a look at the end. Let's take a look at the overall market. Let's just go high level really quick. I still believe we are in a stage 3 topping phase. Now, the stock market is very close to poking to new all-time highs. It hasn't done so yet, so we're not jumping to conclusion. Even if it does poke to nominal new highs, that is what we've seen happen almost every time just before a major stock market correction, a stage 4 financial reset happens, is the market pokes to a new high for a month, or so it could be a day, a week, or a month, and then it rolls over and sells off. So don't go jumping and switching gears too quickly. The underlying technicals, even the fundamentals, the economic data to me is all very bearish, but price action has a way of getting skewed and poking to new all-time highs, especially the S&P 500 and the QQQ, because they're tech heavy and people have FOMO, and they drive the markets of the leading stocks up, which will poke the indices to new highs, even though the majority of stocks, as I talked about in our last video, with the overall equal weighted market, is nowhere near the highs. It's struggling. So one other thing to mention here is we are seasonality wise, we are right into June. This is also when the stock market typically runs out of steam for the summer, for the stock market to start to lose its momentum and roll over. And of course, when I look at several other things, which I brought up before, which is our inbox indicator. Now, we get thousands of emails. We can gauge the sentiment and the tone of them all and all of that stuff. It tells us very, very clearly where we are in the overall market conditions generally. It tells us right now we're at a critical turning point sentiment-wise. The shift has been dramatic over the past month and a half, and it doesn't tell you which way the markets are going to go, but it says something big is brewing because everyone has changed gears. They're thinking, feeling, and saying totally different stuff than they did before. When it's all in one direction, then usually the market has a big change. And I'm big into SEO, search engine, traffic, all of that stuff. I always have been. I love the data. I love mining and figuring out what people are doing. And this is that one extreme that we talked about the day before. We said, hey, this looks like this is the exhaustion. We're going to see a gap lower, a flush down in the morning, and then for the market to put in this big bounce. Of course, the bounces come all the way back up into this area. But this is pure sentiment. This is tracking what people are thinking and doing. And that is what I really focus on. A big chunk of our analysis, I would say 50% actually of our strategy is technical. The other 50% of our strategy to generator signals are based around sentiment. And so obviously trend needs to be in our favor, but the other half of the equation is what people are doing and how strong their emotions are of fear of missing out or fear of losing more money and all of that stuff. So in my book, Technical Trading Mastery, there's a section on technical analysis, what you need to understand. And of course, the market generally has a series of higher highs and higher lows. That's the definition of an uptrend. A sideways market is choppy, which we just went through in the overall stock market. If I flip over to our S&P 500 trade, the stock market had traded sideways, and it went long enough that it decided, our strategy says, hey, it's gone sideways. It's now it's not in an uptrend. It's gone neutral. And that's one of the reasons why our strategy kicked us out. Not only that, but our sentiment changed. Our sentiment indicator that pulls a ton of data said, holy geez, there's big money is flowing out. Sentiment has shifted, get out. So when sentiment and the charts change direction or have a change, we also change our position. So that's kind of where we were. We've gone into the big sell-off. Now we've bounced back up. So the big question is, how does the stock market react where we are right now? But anyway, all this stuff is in my book. If you haven't read it, Technical Trading Mastery, You can get that on Amazon. And that is what, our 30-minute chart, all this to identify the trend, identify these oversold market conditions, these buying opportunities within an uptrend and these oversold conditions. These are all in the book, chapter 10, 11, and 12. If you want to learn the finer details of how we gauge the market and how to track and follow that. So if we go and take a look at the stock market in general, we have the move up. It has been pausing. It is trading right at resistance here. It's popped, bull flag, pop, bull flag. It is on the verge of a pop. In a perfect world, we are long the markets, as we can see here with the S&P 500. We hit our first target. It's starting to break free. Same with the NASDAQ. We've got long the NASDAQ. We've hit a target. It's starting to break free. We are very close to hitting the next targets. In a perfect world, the market rallies 3-4% from where we are. We hit our next target. We get to lock in more gains, reduce our exposure. The stock market then shortly after rolls over, crashes, and falls in a big way. And as you know, that is my bias. I think the market could potentially push up a little bit higher, but I do think we are going to go a whole lot lower. That is what I want. That's what most of you actually want that I've spoken with, because we can make a lot of money as the market goes down, and then we get to start a fresh new super cycle in the economy, in the stock market, in a lot of different asset classes, even real estate, precious metals. So we'll make money on the way down, be able to reinvest in all the good stuff. Dividend stocks are an amazing opportunity at the beginning of a bull market, not near the end where we are now. They are one of the worst, in my opinion, for retirees, just because that's where they put all their money, and the risk I talked about in yesterday's video, how dangerous dividends are. If you hold those, be very cautious and watch yesterday's video. So let's just track where money's flowing today. So today we are seeing money flow out of the Russell 2000. So a little bit of a broad market sell-off, just a little bit of money kind of rotating out. The other indices are slightly positive. Overall, it's just a neutral day. We are seeing money flow into gold. Silver's having a huge pop today. It's up 4%. Really expanding. We talked about how silver has built this bull flag pattern. It was primed and ready to rally all the way up to 36, and then 38 is that next upside target. So silver's finding that bid. We also seeing gold miners starting to outperform gold. They're breaking to new highs. So this is a huge warning sign that we are very close to a financial crisis. Usually these things take off and push just before the stock market does that. And we've seen that with gold already. Gold is the leader. Gold in this type of market environment, gold leads the way. When we zoom out, obviously gold has been screaming higher. It has room to push all the way up to about 37.50 or so. But now we're starting to see the silver and the miners play catch up and join the party. And so now we're really seeing that late stages here that we're getting closer, I think, to a financial reset. And that's why precious metals and miners are starting to come to life. Now, if we take a look over at energy real quick, oil up 0.5%. Nothing too significant here. It's still it's stuck under resistance around the 65, 66 area. And we're just going to let it be. Not too interested in that at this point. If we take a look at Bitcoin, which we are long with IBIT, we'll look at Bitcoin, but the IBIT ETF moves the same. It has been flagging down, pulling back. People keep telling me they see a head and shoulders pattern, on the daily chart, which I don't see. If anything, I would say, well, there's 1, 2, maybe a triple top. If people are thinking this here is a head and shoulders pattern, it's a pretty weird one. Very tiny shoulders with a long neck. I like things to be somewhat balanced. It doesn't look very balanced to me. This here is a rally, a little bull flag, a rally. We could see this as a more so of a little bear flag, a sell-off and a bear flag, and then it could come down. And you could argue this is a little baby head and shoulders pattern, topping pattern. But overall, in the grand scheme of things, when I look at it the way we are right now, Bitcoin has dipped down into an oversold territory. It's riding on top of the 20-day moving average. And if the stock market goes higher, Bitcoin is about to rally. There's no doubt Bitcoin is struggling at resistance, poking to new all-time highs and trying to figure out which way it's going to go. But at this point, it's still a rally and a pause, a pullback, and it is still pointing to higher pricing. But again, everything comes down to what the stock market does. That is the sentiment of the money. As soon as Bitcoin got sucked into the futures market, it's now trapped in the general financial world of money flowing in and out. It's not quite as free-spirited beast as it used to be when it was the Wild West and independent from the financial system, but now it is stuck in it. Unfortunately, it's nice when things are free of the financial system. Other than that, I think that is about it. Actually, I'm going to touch on bonds real quick because I think I've missed it the last few sessions. Bonds continue to struggle. They are trying to figure out what they're going to do. When you look at the big picture and just zoom way out, very clearly it topped out, has been selling off. It's still trying to figure out what it's going to do. In the grand scheme of things, it's just really noisy. It's having a little bounce up into resistance, which is the 50-day. It's also this little cluster here, this little breakdown area. There's a lot of volume that traded through these candles here, this noise. You carry this line through. It's a very significant pivot zone. We have a pivot high, a pivot low, a pivot low. So it's coming into resistance. And when we zoom into the short-term chart, it is red bars telling us still in a downtrend. It did have the short-term overbought market condition. It did have that quick little pullback. And now we're back into this overbought territory. It's back up into here. So I wouldn't be surprised if we see it potentially sell back down for a session or two and continue to be under pressure. Bars are red. The bias is to the downside. Usually bounces up into overbought territories, gets sold into. So that's about it. Anyway, take a look at the video of my daughter's Ultimate Frisbee team. Check it out. This is it, game point. Whoever gets this wins.
All right, this is it. Come on, Legend, you gotta walk.